Hi, welcome to our lecture on auditing. Our topic for today is all about audit evidence. When we talk about audit evidence, this is the basis of the auditor's opinion. So this will be obtained from information from accounting records and other sources of information. And with regards to evidence, as an auditor, we will test the assertions made by the management. These are explicitly or otherwise included in financial statements. And our focus as an auditor is to see whether there are potential misstatements that may have been included in financial statements. As an auditor, we have to collect sufficient and appropriate audit evidence so that our basis on our audit report will be clear and well explained. We have to design the audit procedures for us to enable to collect sufficient and appropriate audit evidence, and our audit procedure will be based on relevance and reliability of information. Now, there are different types of assertions that the client will include or present in their financial statements. So these are major classifications of assertions. Okay, we'll start on existence. So we have to test whether the asset, liability, and or equity really exists. Occurrence, on the other hand, is for us to determine whether the transaction that had been recorded had actually occurred and pertains to entity. Completeness, on the other hand, is where we try to test or we try to see whether all transactions, relevant transactions, had been recorded in the accounting books. Classification, as an auditor, we have to test whether the transaction had been classified properly in the accounting records. Cut-off, on the other hand, we are looking into the transaction which is included in the correct accounting period. Accuracy, as an auditor, we have to test whether the data recorded in the transaction had been properly or appropriately recorded based on their amount. Rights and obligations pertaining to assets and liabilities, whether the company has the right over the asset and they are obliged to pay the liabilities. Valuation is where we, as an auditor, determine the amount included in financial statements are at the appropriate amount. Classifications and understandability. Financial information is appropriately presented and described, and disclosures are clearly expressed. So these are the classes of assertions included in the financial statements, and at the same time, what we will do as an auditor is to test these assertions. Okay, so major classifications or major assertions included in particular report. When you talk about transactions and events for the period under audit, it talks about, or it will be related to, income statement. So commonly it will include occurrence, completeness, accuracy, cut-off, and classification. Assertion about account balances at the period end. This pertains to balance sheet. Commonly it will include existence, rights and obligations, completeness, valuation, and allocation. And then with regards to notes to financial statements, these are the common assertions that might be included: occurrence, completeness, classification, and understandability, accuracy, and valuation. Now, with regards to evidence, we have what we call sufficiency and appropriateness. So let's talk about sufficiency. Sufficiency focuses on the quantity or the number of audit evidences that we need to collect. It is affected by the auditor's assessment of risk of material misstatements. So more audit evidence is likely to be required if there is higher assessed risk. Obtaining more evidence, however, may not compensate for its poor quality. We also have to consider the appropriateness of evidence or the quality of audit evidence. Its relevance and reliability, and its reliability in providing support for the conclusion which the auditor's opinion is based. The reliability of evidence is influenced by its source and its nature, and is dependent in or on the individual circumstances under which it is obtained. Types of evidences. We have first external confirmation. That is an audit evidence that we obtain directly from a third party. So this is commonly we perform when we try to confirm bank balance or debtor and creditor's existence. Representations, on the other hand, we have different types of representations. We have legal representation letter and management representation letter. These are representations or representation letter provided by lawyers and management. So when we send legal representation letter or when lawyers send legal representation letter, it is confirming to us whether the client may be facing or might be facing legal issues or any disagreement with the clients. While management representation letter is a confirmation from them that they complied with legal compliance and other discussions that we made with them, and also their confirmation of their or acknowledgement of their duty and responsibility for internal control. Now, with regards to this, auditor still needs to gather other evidence to support or to test the representation letter provided by the management. Documentary evidence is commonly the one that the auditor will request from our client. These are invoices, suppliers, statements, bank statements, minutes of the meeting, correspondence, and legal agreements. It can be from internal source or external source. Verbal or oral evidence are obtained through interview made with client management and staff. This is used to gain the understanding of internal controls, corroborate other evidence. Computational evidence, where auditor tests the mathematical accuracy, re-adding, and the calculation of complex transactions, and trying to verify formulae. Electronic evidence includes client's computer emails to auditor, scans, and faxes. One challenging thing about electronic evidence is that it doesn't have paper trail. So the auditor needs to consider the quality of the client's computer when assessing reliability. Physical evidence, gathering or inspecting assets to test or see the condition and to reconcile with client's records. Now, talking about confirmations a while ago, we have two types of confirmations. One is positive confirmation. This is a request that we are sending to the third party and requesting them to confirm even if they agree or disagree with the information included. Negative confirmation, on the other hand, we will only request the third party to respond if they disagree with the information included. Now, to obtain evidences, we have to perform these procedures. So the first one is inspection. When you inspect, there will be two types of inspection that we can perform. One is inspection of assets, and the other one will be inspections of documents. External confirmation, this will be a method that we try to send a confirmation letter to a third party. Okay? It's either by paper, electronic, or other medium. Observation is similar with the inspection, but observation will focus on process. So you have to be there and observe or see how the process goes based on your understanding of the client process or based on the policy provided by the client. Recalculation consists of checking the mathematical accuracy. It can be performed manually or electronically. Reperformance is an independent execution of procedures conducted by auditor to test whether the controls had been executed based on the entity's internal control and policies. Inquiry, these are conducted through interview, also using checklists, or we call internal control checklists, okay, to know how the process goes or conducted by the entity. We have to conduct this with knowledgeable persons. So if we are trying to ask about cash receipt process, we may need to include the cashier. And then analytical procedure, it includes evaluation or analysis of relationship between both financial and non-financial data. So example of this will be if we are trying to test the increase of salary, we have to look into whether there are increase in the number of employees, or there may have been decision to increase the salary rate. Okay, so two things that we have to be mindful of about evidence will be relevance and reliability. So relevance deals with logical connection with or bearing upon the purpose of audit procedure and, where appropriate, the assertion under consideration. The relevance of information to be used as audit evidence may be affected by direction of test. While reliability, the reliability of information to be used as audit evidence, and therefore of audit evidence itself, is influenced by its source and its nature. The circumstances under which it is obtained, including the control over its preparation and maintenance where relevant. Okay, so to test relevance, we have to design tests of controls pertaining to that evidence. Includes identifying conditions or attributes that indicate performance of a control, and deviation conditions which indicate departures from adequate performance. The presence or absence of those conditions can be tested by the auditor. Substantive procedures pertaining to relevance are designed to detect material misstatements at assertion level. They comprise tests of details and substantive analytical procedure. Designing substantive procedures includes identifying conditions relevant to the purpose of the test that constitute the misstatement in the relevant assertion. The reliability of information to be used as audit evidence, and therefore the audit evidence itself, is influenced by its source. Now, talking about reliability. So if we talk about generalization of the reliability of evidence, and we will focus on sources. So the first one, the reliability of audit evidence is increased when it is obtained from independent sources outside the entity. The reason why it increases the reliability is because an independent entity or outside entity doesn't have a direct influence on accounting records. So which means they don't have any hand on the transaction. They can see it objectively and they don't have any interest on changing it. The reliability of audit evidence that is generated internally is increased when the related controls, including those over its preparation and maintenance imposed by the entity, are effective. The opposite will happen if the controls are ineffective. So meaning the reliability will be less when we talk about audit evidence. Audit evidence obtained directly by the auditor is more reliable than audit evidence obtained indirectly or by inference. Same with the first item that we have talked about. When someone had the hand over the evidence, the reliability might be less because they already have the hand over it. So as an auditor, if we have directly obtained it, the reliability will be more. Audit evidence in documentary form is more reliable than evidence obtained orally. The reason, sometimes when you obtain it orally, it may not be properly recorded, but can be denied by someone. So if you obtain documentary evidence, electronic or paper-based, it will be more reliable than just hearsay. Audit evidence provided by original documents is more reliable than audit evidence provided by photocopies or facsimiles, or documents that has been filmed, digitized, or otherwise transformed into electronic form, the reliability of which may depend on the controls over their preparation and maintenance. The nature, timing, and extent of audit procedures may be affected by such matters as the nature and complexity of the matter to which the management's expert relates, the risk of material misstatement in the matter, the availability of alternative sources of evidence, the nature, scope, and objective of management's expert's work, whether the management expert is employed by entity or is a party engaged by it to provide relevant services, the extent to which management can exercise control or influence over the work of the management's expert, whether the management's expert is subject to technical performance standards or other professional or industry requirements, the nature and extent of any controls within the entity over the management's expert's work, the auditor's knowledge and experience of the management expert field of expertise, and the auditor's previous experience of the work of that expert. If information to be used as audit evidence has been prepared using the work of a management's expert, the auditor shall, to the extent necessary, using or having regard to the significance of that expert's work for the auditor's purpose, evaluate the competence, capabilities, and objectivity of the expert. So, as an auditor, we have to test or evaluate the expert's or specialist's competence, capabilities, and its objectivity. So, after we have done that, we also have to obtain how the work of the expert goes. So, we cannot just let it or let the expert do things without us understanding it. So that is one of our responsibilities. Evaluate the appropriateness of audit or expert's work as audit evidence for the relevant assertion. Because whatever they perform might have an influence on the assertion provided by the management. So we have to determine the appropriateness of the work of expert if it is part of our audit evidence. When using information produced by the entity, the auditor shall evaluate whether the information is sufficiently reliable for the auditor's purpose, including, as necessary in the circumstances, obtaining audit evidence about accuracy and completeness of the information, and evaluating whether the information is sufficiently precise and detailed for auditor's purposes. Now, if there will be inconsistencies or doubts over the reliability of audit evidence obtained from one source is inconsistent with that obtained from another, or the auditor has doubts over the reliability of the information to be used as audit evidence. In this case, the auditor shall determine what modifications or additions to audit procedures are necessary to resolve the matter, and shall consider the effect of the matter, if any, on other aspects of the audit. So, when we have seen inconsistencies, we have to see whether we need to change the way we do audit, or we may think of adding procedures that might be fit to test the audit evidence consistency. And that's it for audit evidence. Our references will be ISA 500 Audit Evidence and ISA 315, Identifying and Assessing the Risk of Material Misstatement through Understanding the Entity and its Environment. Thank you.